All right, good morning, Advantage members. Happy Friday. It's March 17th. So we're coming into a pretty strong closing of the trading week. Trading week meaning, the US session, right? Obviously, Bitcoin is open 24/7. Crypto markets are open 24/7. But we know that equity markets have pretty much, been guiding our movement up and down for quite some time. And, so far, equity markets, as they moved up off the lows on Monday, right, from this low down here, from 3,800 points all the way to a high of 3,965 yesterday, we know that BTC, made similar moves starting off last Friday, right? So Friday itself, BTC was already moving and grinding all the way down to 19,000 and some change, and then rapidly moved up Saturday, Sunday, Monday, and then rest of the week we spent here at the highs. Now, the question is, okay, what do we do at these highs, right? Is this like a time where bulls need to get ultra bullish, and do the bears need to give up all bearish cases? I think it's kind of coming close to it where bears may need to really rethink the strategy, because here's a couple things, right? Here's how I look at the markets now. I believe right now that the markets are providing a pretty phenomenal position to get short, whether it's from a risk or reward perspective. We also have the event coming up next week, which is the FOMC event, which is probably one of the most anticipated events so far of this year. Where is it? What's today? 17th, right? So it's next. When is it? Oh, yeah, right here. Wednesday, March 22nd, the Fed Powell conference, right? So the FOMC meeting. Okay. Why is this important? And why is the timing of this important? This is about, 4 or 5 days from now. The markets have already drifted off the lows and banged right into key highs up here, right? So we know for the most part that the markets are effectively pricing in maybe a pretty good scenario coming out of the FOMC meeting. This meeting right here, if it's good, markets may sustain higher and maybe even go higher from here. If this event is not good, wherever the markets are, whether it's here or higher up from here, or if they close, let's just say BTC closes, around 25 and some change by today or tomorrow or whatever, if the FOMC meeting come Wednesday, which is somewhere around here, if that meeting does not go well, this can nuke back down. I don't know how deep it nukes back down, maybe just consolidates like this, and then rest of April, then it keeps grinding down. I'm really not sure. And I don't want to take a stab at, trying to predict or, trying to understand human decisions of what the Fed is going to do, right? Based on CPI data, based on the banking crisis that happened. I have no idea, right? What I can say is this. For the past 1 year, Jay Powell has been increasingly very, very accurate and very consistent and honest in his approach of how he wants to raise interest rates. And not a single time in the last year has he not done what he said. Meaning when he said that we want to hike 25 by next month, 75 by the month after, 75 after, he's done that increasingly well for the entirety of last 1 year. I think the first rate hike was actually last March, if I'm not mistaken. And from then, it's just been very consistent, right? This time around, again, Jay Powell has actually stated, this was a month and a half ago, that they expect to hike interest rates by 25 basis points in March. I don't see why that would change, right? I don't really see why they would want to deviate from their decision. Now, if they do, okay, then that's a surprise, meaning like that's something that he hasn't done in a year, and that's okay. But if you want to go off the strategic and consistent decisions of Jay Powell, well, then 25 basis points hike is more than likely as a decision. And now, again, maybe you don't care. Maybe you don't care what the Fed does, and you just want to trade BTC, and you just want to say, okay, well, I don't really care what the Fed does. I don't care what equity markets do. I think that BTC in this environment where banks are failing, this is exactly what BTC is meant for, right? Bitcoin is supposed to be the asset that's supposed to be, creating an alternative financial system. And this is where it is going to surprise and shock people by ripping up higher while everything maybe else, goes sideways or goes down, right? This is the perfect time. And I would agree with you. It is the perfect time, but it doesn't mean that it has to do that, right? And it doesn't mean that it has to do that now right away, especially as, maybe some much anticipated data is coming out next week, okay? But if you believe that, well, any pullback, you want to be a buyer, okay? So whether it pulls back to 25, 24, 23, 22, wherever, right? If you want to be a buyer, any and all these pullbacks, you may get some pretty decent opportunities, okay? So I'm letting you know that right now. If you fundamentally believe that, your decision categorically is made simply on the fact that Bitcoin is made for this moment, this banking crisis BS that's going on, Fed hiking interest rates and breaking things in the economy, Bitcoin is made for this. If that's the case, then your decisions should be, based on spot and long-term buying, right? And in fact, even if it's not, based on those fundamentals, right, you could just say from a strategic point of view, oh, well, I think that Bitcoin had a pretty substantial technical retest, which is this 200-day moving average right here. We also cleared up some of this, inefficiency right here with a retest right there, right? We swept these lows and these lows with this move right here. So all in all, BTC has gotten all the firepower that it needs to maybe propel higher, okay? The reason I'm making you all these bull cases is because I want to strengthen the bull argument if you're bullish, and I want to give you the bearish argument if you are thinking about being bearish or thinking about hedging or being careful, right? So let me get through the bullish arguments. The bullish arguments are this. Okay, we are trying to crack above the 200-day, 200 weekly EMAs and MAs right now as well. We've done a pretty damn good job, right? So far, we're really, really trying our best to crack above it. The other thing is, this was the last big weekly candle back in June when we had that Celsius and Three Arrows Capital collapse. BTC just wicked right into that. Wicking right into the highs of such monumental moments where the markets collapsed. When you wick into the high of something like that and you basically erase that entire selling, that means that the asset itself is ready to maybe start the next leg up in the market. I'll be honest with you, right? I'm not trying to be ultra bearish here or ultra bullish here. I'm just being honest with what technicals mean. So in this particular instance, the technicals are really saying hey, shit, we may have built enough of a base. Maybe this is like a double inverse head and shoulders base that we've built. And now we're ready to put in another rocket towards 32K or something. If y'all remember several weeks ago, right? And again, I feel like I once again talked myself out of this decision. In the middle of February, if y'all remember, right? I had bought the first pop at 24,300. I added to my position at 23,000. And then again, once more added at 20,300, right? But this was predicated on the fact that I wanted to sell in similar moves of what happened in the 2018 and 2019 rebound, this rebound right here. You see, in 2017, when we went to 20K and went down to 3,100, we rebounded all the way to the 618 fib right here, which is 13,000 and some change. That's a 618 fib of this high to this low and back up here. This time around, similar things were happening. We had a high of 69,000, a low of 16,000 or 15,500. And then the subsequent rebound for 618 fib would have been to 49,000 and actually still could be to 49,000 up here. I'm not in disagreement with that. I still think it's possible, okay? But when I start seeing things breaking in the real economy, things breaking in banks and banking crisis and stuff, again, I'm human, right? Like I'm going to make, let's just say, let's call them mistakes. I'm going to make these mistakes and maybe not take on these trades or not hold on to them, because fundamentally, for me, it would be the rational decision to just say, hey, I got to be very careful with the market because I really don't know what's going to happen in the next, ensuing few weeks or few months. Does the economy get worse? Does the Fed keep hiking interest rates? Does, the equity market break down further? I was talking to someone about this the other day. I said, hey, if you remember, and again, I was sort of younger back in the 2008, 2009 financial crisis, but I've studied it. I know how things panned out. And so in the 2008 financial crisis, we had first begun the first big leg of the bear market right here, right? This stretched from October 2007 all the way to the first big banking failure, which was a Lehman collapse in September 2008. So literally a year later, we had about, from here to here, this point, about a 23% drawdown in the S&P 500. What people don't know is the Lehman collapse was actually not the bottom of the market. After the Lehman collapse, which happened on September 15, 2008, and you can look this up, the market proceeded to sell off another 40% or 43% after for another almost 6 months thereafter. 6 months, you just had heavy selling. Okay, that is what I mean where, a banking collapse is not a good thing. And I don't think it's actually a good thing for crypto, but it sure seems like it right now, but anything can happen in the coming weeks, right? Maybe things get worse. Maybe the regulators and governments and the Fed gets tighter on crypto, or they get tighter on equity markets, right? That is what I mean from a perspective of looking at macro information, analog data and events from the past. How did things play out? Then again, technically BTC wasn't really born then, right? BTC was actually born after the financial crisis, and BTC was actually born for moments like now, which is a banking crisis. So you can make the arguments either way. And this is why I'm making the arguments either way for a bullish or bearish case for you guys. Now, if you want to just simply say, hey, we're banging right into resistance. We, took out this local high right here. Maybe it's time I start putting on hedges just as a caution, right? That's not a bad idea. We're banging into this pivot right here. This is a yearly pivot, right? Which is around 27,000. We've gotten a little bit extended in my opinion. Okay. Like if we start looking at, volume perspectives right here, this to me is like a little bit stretched. You had some pretty heavy volume going to this high right here. After that, you had this local high right here with decreasing volume, another higher high with even lesser volume, right? And then over here, now you have finally a spike in volume right here, but now you have a higher high with lesser volume. Overall, volume is kind of grinding down. Now, I'm not someone who says, or rather who likes to say that, oh, every high, you must have a higher volume. Because technically, sometimes what happens in markets is you actually don't need that much volume to keep pressing higher because people are just way too scared to buy. Volume happens, remember, because there's a buyer and a seller, right? If the buyers are just slicing through order books because there's just not that many sellers, they're just going to keep ripping higher with lesser volume because it doesn't take that much money to push the market up. So I fundamentally believe like, okay, yeah, that's also possible too. I'm not someone who's going to say, oh, well, it's less volume, so, how can it break higher? No, I get it. There's different dynamics at play. But generally, when you're making grinding marginal higher highs like this, and you have slightly lesser volume in like a intra-week basis right here, or 3-4 days back, it was, spikes at the high, and then now you get spikes at the high with a higher high and lesser volume. I'm careful here. I'm careful here because, you're banging into the weekly pivot, like we said, right? You're coming into an area of extension where you have, almost a triple sweep of the highs. A pullback maybe due. I don't know how deep the pullback goes. I don't know what next week is going to bring. I don't know if the pullback means like this is going to be a very choppy month of March where we do some crap like this and then break out in May or June, right? That's also a possibility. So that's why I'm saying if you want to be careful and cautious here, this is as good of a time as any when it comes to want to be careful for hedges or shorts. Not investment advice, just letting you know. And that's exactly what I did. I just put on a small position for my short, tagged it almost exactly at the pivot, 26,750. I'm going to just, keep my stop at 28,000. I don't see any reason why BTC from here will spike to 28,000, which is another 5-6% move and then break down. Like if it's supposed to break down or pull back further, this is probably a decent area, right? This is probably a decent area for us to maybe shop about, maybe build a range like this. And in which case, like if I start seeing, oh, this area is maintained as support, I'm out, right? I'll just close out that short, take some nice profit wherever I got in from here to here, 2-3% profit, whatever that is. That's it, I'm out. And then in which case I might even think about getting long in this area and just say, well, I'm not going to fight it anymore, right? There's no reason for me to just think about another short scenario when the market is showing me that, oh, it's building a base right here, maintaining structure above this level right here. From here, I may need to get long back to 27, back to 28, and maybe as high as, that 32, 45K scenario that I spoke about earlier, right? Alts, now again, this is kind of interesting to me. Very, very fascinating. Look at Bitcoin dominance. I mean, it is on just a rip roar tear. Usually when dominance is ripping like this, I generally do not like to get into altcoins because Bitcoin is literally showing you like, it is me against the world. Like that's literally what it's saying right now. So I'm reluctant to pull the trigger on alts. I took one trade again, and now I'm kind of regretting it, but I wanted to take a stab at it. LQTY, which is again one of the alts that I've been paying attention to for a little while. It's doing all right, right? Like I took a stab, I said, okay, let me get in at 275. Let's see what it's going to do. Spiked up a little bit last night and then kind of rolled back inside. Now, again, I did the fundamental research on LQTY, but again, sometimes fundamentals are just not enough, right? Sometimes there's so many external factors, whether it's the Fed related, macro related, BTC related, or equities related things that could drag down assets that are not in your control, right? And sometimes you just have to give in and just say, I'm just going to manage my risk. Whatever stop I have, 265, leave it at that, and let the market do its thing. Sometimes that's really what you have to do. And so anyway, that's pretty much it, right? And once again, right, this is not pertaining to the people who believe like, if you're wanting to be a buyer for crypto and you believe in some of these alts for the long-term future and you want to buy spot for 6 months or 1 year and you've done your research, then, maybe every pullback may be an opportunity for you, right? Maybe you've done your research in the AI area. Maybe you like Fetch, PHB, or Ocean. Maybe you like some of the gaming tokens like Sand or Engine Coin or Gala. Maybe you like some of the newer coins like LQTY, like I mentioned, Hook, Optimism, whatever, right? INJ. So it's like these things that, if you believe that, oh, well, I like these coins and I don't really care what's happening, then that's your prerogative. Okay. All right. Everything else on my Twitter feed, it's for the most part, I'm just really hanging out. Just reading stuff that's going on in the equities world. There's a really good podcast I mentioned. This one, Bank Bailout with Michael Cow. There's another one that just came out today with Lynn Alden on the same Blockworks macro podcast. I think you guys should check out. I just listened to it this morning. Really, really good. And yeah, that's pretty much it. All right, everybody. Thank you so much. Y'all take care, and we'll chat soon. Cheers.